Welcome back, guys. So, what we've reviewed in the last week was chapter 7 and 8, dealing with perpetual inventory. Today, we are moving on a new concept, and something that you will often see is going to be dealing with cash. Okay, so let me go ahead and put this up. Be dealing with cash, and what is cash? Well, let's figure it out. Cash is pretty much anything that has a value, right? A dollar value. In this case, we use the US dollar bill, okay? Again, it's anything that we use to exchange for a good and or service, okay? So that is technically what cash is. It's our form of currency. It is what we use to buy stuff and to sell stuff, right? You could also sell cash. Well, that is what cash is, and this is what it is. So, what is a check? Well, a check is I guess another way to describe it is it's also some form of cash, except instead of having it readily available, you're writing a check. So then you can go ahead and put in a deposit into your bank, and what's going to happen, it's going to transfer the money over. So if you guys used money orders before, they are the same thing. So that's what a check is. Now, what makes a check valid? There are 5 things that you need that makes a check valid. You definitely need, number 1 is going to be the name of the person that you're writing this check to. Okay? Full name, actual name, whatever the name in the bank is, whatever they're on file, you need to write the name for. Okay? Second thing is you need a date. Okay? The date's going to validate when they can take the money out. Okay? If they write a date in advance, which most companies do, what happens is you're not able to cash out that check until the date that it's valid for. Okay? Third thing that you need to have is an amount. Okay? You need to have some kind of amount in there in order to be able to process the check. Fourth thing is you need your account number. Okay? You need a place for where you're taking this money out of. And then lastly, you need the signature to approve this transaction. Okay? So down below is a perfect example of what a check looks like. Any way of around it, the only thing that you can customize when you're looking at a check is if you have those fancy banks that allow you to upload photos. The only thing that you would make sure that's actually different would be your background. But for the general, most cases, what the check looks like, it's going to look exactly like this. You're going to have your account number at the bottom, the date at the top, the amount, the payee, and the signature at the bottom right corner, right? This is a standardized check, okay? And you cannot change it, because if you miss one of those information out there, it's not valid, okay? So again, checks can be is another current asset, right? It's another form of money, all right? It is readily available, but as soon as you deposit into the bank, it may take 2 to 3 days to process for you to actually have the full check, okay? Next thing is going to be credit cards. Yes, this is widely used nowadays, okay? Everything that we're going for is going to be, bless you. Everything that we're going to be going for is going to be paperless, okay? Everything that we do nowadays is going to be electronically, all right? So this includes online payments, right? You pay with your credit card. Now, what credit cards do is they are a form of cash, right? But the only difference is when you're using a credit card, it's not you having this money readily available. It's a company allowing you to have a balance for you to make your transaction. So you pay via you have someone pay for you in advance, and you would slowly pay them back, whether it's a monthly payment or not. So every time you get your statement in the bank, you're going to have to pay them off with their monthly bills or with their monthly payment. And what usually that entails is you will be included interest, okay? So it's very, 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 very crucial that you understand that credit cards, they're not the friendliest kind of form of money, but it is the easiest so far in the society to be able to utilize because it's user friendly and it's easy to, swipe, right? It's easy. It's the transaction makes it so much easy. All right, here I made a couple popular credit card companies that do these transactions. Okay, so often you will see this, but the fine line difference between using a debit card and a credit card is a credit card will charge you for interest, and it's not your money; it's what you owe them. Okay, so having a credit card it means you're creating a liability. Okay. All right. So for this class in understanding cash, I want you to only focus on a petty cash fund. Okay? Well, what is a petty cash fund? Okay? So a petty cash fund is basically money that you put on the side for emergencies. Okay? For example, if you are operating your business and for some reason you ran out of cups for any reason and you need to make a quick run to the store and buy some supplies. And what the petty cash fund does is it acts as if, oh, instead of having the owner there writing you a check because you have to go to the bank and cash it out, this way the cash is readily available. All you need to do is you need to make sure that you designate a person who's in charge of the cash box. They write up your report, and what's going to happen is they're going to give you the money. And when you're done when you're done buying the supplies, you're going to come back to the petty cash fund, and you're going to drop off the exact change and the receipt that goes with it. Okay, so those are the two facts. That's what a petty cash fund is. It's meant for you to make small, minor expenses that that you need to do it right now versus where you can have the check being available. Now there are other forms of petty cash, right? But one significant thing that you need to know is that you would need a physical lockbox. Okay, so you can't have just a place to have a pile of money. Anybody can steal it, right? You also need to designate someone to be in charge of that money. And another thing is you're going to create a ledger account for a petty cash fund. Okay? Now, if you are a store that has a cash register and you need to have money in it, that is another form of a petty cash fund, except instead of using it for minor expenses, you're using it so that when you operate your business, you have money to give back to your customers, okay, for cash sales. So in other words, if you look at it carefully, it acts as if it's the same a concept as a petty cash, right? Generally, your register would have a key to it, so you can lock it up. And in order to open it, you would have to create a transaction. Okay? And then same thing, it has its own separate ledger account for it. Now, what you can do is other forms of a petty cash fund, right? If you don't want to do this whole physical cash in a box, you can do either reimbursement. So if your employee decides to buy something for the company, right? Let's say I ran out of copy paper, right? I have him run down to Staples. He uses his own personal credit card and he brings it back with the receipt. What I can do is I can write him a reimbursement check. That is the same function as a petty cash fund. He made a charge for the business but using his own credit card, I go ahead and write a reimbursement check. Okay? I can also have a business credit card and be like, here, I can give him the credit card and make sure I log that he has the credit card. And if he makes any extra charges for it, I would be able to see it because I have access to the business credit card. So if he goes and he buys copy paper, he needs to give me the receipt so I can validate that credit card transaction. Okay? And then same thing with cash receipts. So if he were to purchase something with cash and bring it back, and he would have to have for sure the receipt and the actual exact change in order for me to validate that extra spendings. So those are borderline, fall under the same category as petty cash. Ooh, sorry, I went up too much. Okay, so here are a few rules when we're dealing with a petty cash fund. So first off, when you're just having your company, right? Usually, typically, this petty cash fund has to be formulated by your accountant. Okay, your accountant must decide, well, is it useful to have a petty cash fund? Is it necessary to have a petty cash fund? Or do you want to use an alternative petty cash fund? In this case, I need it for maybe I need to buy coffee for the office, right? I need to go and make a quick run to the nearby grocery store and buy coffee. Okay, so if I think that's a reasonable thing to have a petty cash fund, for whatever reason it is, you go ahead and have your accountant create and establish how much money is going to be in this petty cash fund. So here, number one is the manager must establish an amount. So for example, like what is reasonable? What are the necessary things that would fall into that category for you to have to go make those emergencies? So a good example would be copy paper, right? Every office needs copy paper. And if you run out of copy paper, you might need to make a quick run to Staples and buy a ream just in case. So, yes. And how do you journalize it? I will show you how. Okay? And you need to create a ledger account for the petty cash fund. So here, for example, on January 5th, you establish a petty cash fund for $500. So you're assuming that my petty cash needs to be there. I need to go ahead and create $500 in this little lockbox just in case for any expenses that happen. And here, this is how we journalize it. We're going to increase our petty cash fund, right? So what is a petty cash fund? It's another form of a current asset, right? It's money that's readily available, but it's just in a lockbox. So here, I'm going to debit my petty cash, and I'm going to credit my checking. Now, what you're going to do is, this is what you can do. You can write a check to the person that is in charge of the petty cash fund, or you can go ahead and pull out the money from your bank and just make sure that it came from your checking account, and you're designating it into the petty cash fund. So here, because I established a number, I am going to place it into my petty cash fund for $500. Okay? Now, what happens that is, well, what if that petty cash fund isn't enough? Like, I don't want $500. I need to increase it so then it's enough to cover all my expenses. Maybe last month I spent too much and I barely had enough money in the petty cash fund. So therefore, I need to increase it. All right? Now, every transaction that you do, okay, so this is going on forth after we deal with this is how we record our transaction. But for this case, I want to increase the amount of petty cash I have in my petty cash fund. So in this case, this example, on February 5th, you increase the petty cash fund by $250, okay? If I were to increase my petty cash fund by $250, Therefore, on my ledger, I have the previous 500 and I'm adding an additional $250, making my total petty cash fund have the availability of $700. Okay? All right. Now, what happens when I need to actually spend my petty cash fund? So, when you spend your petty cash fund, there are a few things that you need to know. The petty cash fund, when you are actually making the transactions, you do not actually record them until the minute you have to replenish your petty cash fund. So, for example, I need to make a coffee run because I'm having a meeting. I need to go to Starbucks. I need to get the box of coffee with all the supplies, right? I need it for the meeting. Okay, that's going to cost you $50. Okay, so on that day, whoever's in charge of the petty cash fund, they're going to write that in there that it costs you $46.95, whatever it is. So you're expected to return to the petty cash fund with the receipt proving that it was $46.95 and the exact change. So $3.05 change. Okay? And you're going to put that back into the petty cash fund. Okay? Now, by you placing that into the petty cash fund, you are not going to record that transaction. Okay? So again, the minute you use any money in the petty cash fund, you are not going to record it. Okay? So, for example, if I've made my Starbucks run for that meeting, you should not record the petty cash fund being taken out of, okay? That is the wrong way to record this transaction. What you are going to do is, what happens is at the end of the period, when you decide to replenish the petty cash fund, you are actually going to calculate all the receipts and you're going to make sure that you count the cash that's remaining, and the balance in the petty cash fund should equal up to whatever you establish the petty cash fund as. So for this example, I started off with 500. I increased it to 250. So now my balance has to be 750, and it must consist of total number of receipts plus the cash that is in the petty cash fund. So no matter where you take, when you keep taking money in and out of the petty cash fund, it must always equal the total amount that you established the petty cash for. Okay?
Yeah.
So understand that. Okay? So for this example, petty cash fund, I'm going to replenish it. So here on February 20th, okay, you increase the petty cash fund by $250, right? With that being noticed, so now I know that, okay, I don't know why that needs to be there. I think I was supposed to get rid of that. I'll make that adjustment later. But understanding that you have the petty cash fund as $250, you are not going to write another check for $250. You're going to calculate all the receipts. So here I made an example. I did office supplies, okay? I had a delivery fee. I had to buy business supplies, and I had a party supplies, and I had to buy coffee for meeting, and I bought postage stamps to deliver some stuff. And with that, I calculated all my total number of receipts, and I get a total of $178 even. Now, what I'm going to do is with that, in order to replenish the petty cash fund, right? If let's say you establish your petty cash fund as just $250, so you should have $178 plus the cash that's remaining, which should be roughly $70, right? You should have $70 remaining. But that is not enough to make your transaction. So in order to replenish it, you're going to write a check and fill the petty cash fund with more money to equal up to your total of $250. So you always want to make sure that you frequently do that, so then you have that money, that extra money to pocket out for those extra expenses that may occur at any given time. So you want to make sure that you still always have cash available, okay? And this is how you record a replenishment, okay? You don't write the check for the same amount, and you're actually counting all and validating all the expenses you incurred by counting all those receipts, okay? And you're writing a check for those same amount for the receipts. So now I calculated again $178 of receipts, and what I'm going to do is I'm going to take that and I'm going to convert it back into cash. So then the amount in the petty cash fund is now still $250. All right. Does that make any sense? All right. So the last concept I want you to show is to either decrease it or to close out the entire petty cash. Now, there will be a time where you're like, this petty cash fund, people are stealing from it. The manager's not keeping a good track of who's taking the money and who's not taking the money out. Other things like that can come into factor that can make the petty cash fund useless. So once you've established that and your company says, we don't need the petty cash fund anymore, what's going to happen is I'm going to go ahead and get rid of it. So on June 1st, you're going to close out your petty cash fund. And in this case, I'm going to pick up all the money and I'm going to deposit back into my bank for $750. So I started with $500, I increased it by $250, and now I'm going to close out my petty cash fund for the total amount of $750. Okay, so I'm going to take all the money in there and I'm going to deposit into my checking. And that's all you do. And how you record that is you're going to debit your checking because you're putting the money back into your checking, and you're going to take away from the petty cash fund. So your petty cash fund should be $0. Okay, so does that make any sense? Okay. Now, last thing I do want to touch upon a little bit is what is the difference between a cash shortage and a cash overage. All right. So this is involved when you're dealing with a petty cash fund. Okay. So oftentimes, if you're not really keeping really good track of if the person that you designated as the petty cash manager, right? If they're not keeping really good track of it, of the money that is going in and out of the petty cash fund, then you're gonna come up with these shortages and overages. So oftentimes, right, some people they take money from the petty cash drawer, usually later that day, and they buy the materials and they end up showing to work and they forget to put the money back with the receipt. So they end up pocketing that money. Other times too is sometimes you take the money out and you forget to record it. So that is the reason why you would have a cash shortage and a cash overage, okay? So what that means is the total amount in your original petty cash box does not pan out. So if you established it at $500, you calculate your total receipts and you calculate total money, and it does not add up to $500. That is considered a shortage or an overage, depending on whether it is less than $500, then it's a shortage. If it's over $500, then you have an overage. Okay? So this is why you're more likely to have it if, one, you forget to record the transaction, two, people take the money and don't put back the receipt, and other things is like, yeah. Okay? So for this example, I'm gonna show you how a shortage would work. So for this example, I have the same transactions right here, right? My total amount of my transactions is going to be for 590. Okay, so if I total up this, it comes out to be 590, right? But what I found in the petty cash drawer was there was no money left. So if I establish my petty cash fund to be $600 and I find that 590 is actually there, but I'm missing that extra $10, then I need to report it as a shortage of $10, okay? And then I would write a check for the total of 600, okay? Because at the end of the day, your petty cash fund should always be 600. Okay? Always, okay? So in this case, I calculated all my receipts and I found that it was a total of 590 and there was no extra cash, meaning I am short. So it is 590 when I'm supposed to have 600. So I need to report that this $10 is missing. I don't know how. I'm going to have to find out. But yes, and I would have to report it as a additional $10. Okay? Oops, sorry, let me go back one. So I write my check for 600. Okay? Now, if we're looking at an overage, so here, same scenario. I bought my supplies. However, my total supplies is going to be, or my total expenses is going to be a total of $600. Now, if I establish my petty cash to be $600 and I end up calculating all of my receipts, it's exactly $600. However, I find $20 extra in my drawer. And that's weird, right? How can all your receipts total $600 and I have a random $20 bill in there somehow? Now again, this can happen by, when they gave you the receipt and they gave you the change, they probably didn't have the change exactly, so they dumped their bill without taking the money out. So this could be an accidental exact change, and they just forgot and just dumped in the $20 by accident. Okay, it happens. So here we have a total of $620 over. Okay, and my petty cash should only be 600. So what's going to happen is you're going to have all of these be expenses, and what you're going to have is you're going to recognize that you have an overage of $20. So because you have an overage of $20, what's going to happen is you're going to write a check for less amount. Okay, so you're going to use that extra $20 to apply for the total receipts in the box, and you're going to write a check for less amount. Okay, so in total, you're still going to be 600, but you're using that extra $20 that was laying around in there. You're recording it, but you're going to use that to go ahead and reimburse your petty cash fund for that $600. Okay, and this is what happens when you have an overage, right? You have $20 over the amount that you originally established it for. Yes. Okay? Okay? For the exam and for the purpose of this class, I do not need you to know shortages and overages. Okay? Reason being is because most likely your company that you're using will not have a petty cash fund and most likely have a business credit card. Okay? But I just wanted to make sure that if you do, in case, again, this applies for if you're running a business and you need a cash register, this would be the perfect example of how you can apply that this concept of petty cash to if you have a cash register. All right? So again, chapter review. I just want to make sure that you go over this. So how to establish a petty cash fund, how to increase it, how to decrease it, and what you do to replenish it. Okay? And yes, 2 characteristics because you need to have a physical cash drawer and you need to have a ledger account for it. Okay? So that is it for that. Now I'm going to go ahead, which is exercise chapter 9, petty cash. So here I already have it pulled up, and let's go ahead and answer these questions here. All right, so we're dealing with petty cash fund. So question number 1, on January 10th, you decided to establish a petty cash fund for a total of $250. Journalize this transaction. Okay, so what do you need to do? So you need to do the date.
Petty cash, checking.
Okay, so January 10, or actually I can go ahead and write this. So 10 January, oopsies. 10 January, you're going to open up the petty cash fund. So here's your petty cash, and you're going to write a check to the petty cash fund, or you're going to take money out of your checking and you're going to place it into the petty cash fund. And for this case, we're going to establish it for $250. Good. All right. Question number 2 says, on January 12th, you took $20 from the petty cash fund to pay for party supplies, costing you $18.57. Journalize.
Petty cash for $18.57, and party supplies for $18.57.
No. No. That's not how you journalize this. How would you journalize this?
For $18, you're gonna credit petty cash for 18. What is that? 18.57.
Okay? No, that's not how you are not going to use petty cash fund. Okay? So
Take 20 out, and you only spent $18.57. You give that in the receipt back, and so originally you only spent $18.57.
that's correct. Now, you did hint out that you said that you need to give back the receipt with the money, right?
And the check.
So, where are you putting this money? In the petty cash fund, that's correct. And when do we recognize this petty cash? When do we actually figure out that we spent $18.57? At the end of the period. That's correct. So, question here is, do you need to journalize this in this transaction?
I'd say yes, but
No, because it's 2 days. It's 2 days after you establish it.
Okay, yes and no. But remember, when we're dealing with any petty cash funds, we don't calculate it or recognize it until the end of the period or whenever we replenish the petty cash fund. So in this case, we do not journalize anything. So we don't even recognize that we bought party supplies. So this answer is no entry. Okay? Make sure you understand that, okay? Now, I'm going to ask you a separate question from this. When we close out the account, that is when you can credit petty cash. Okay? So your petty cash, when you establish it, it will remain the same amount throughout the entire time. Now, if you were to credit your petty cash right
Yes.
now for $18.57, that means your petty cash should be $18.57 less than what you established it for. That means your total amount is only
Yes.
going to be for 220 something dollars. Okay? And you're not supposed to do that. That's not how petty cash fund works. The purpose of petty cash fund is when you establish it, it's emergency money. Okay? And you don't record it until you are replenishing your petty cash fund. So in this case, you do not need to have an entry for this transaction because we do not recognize it until later on. Okay? Any confusions and questions about that?
Makes sense better. Don't you need to keep track of how much is in there at all times?
Yes, that's why the person who's in charge of the petty cash fund is going to make sure that you give that $20 back. So $20 meaning whatever, 18.57, right? That's the receipt, and you're gonna get back $1, and you're gonna get back $1, and what is that? 43 cents. Yes. Okay. All right, and
Okay.
that's going to make sure that the person who's in charge of your petty cash fund makes sure that at all times that the petty cash fund equals whatever you established it for. So in this case, it needs to equal for $250. So if you take away $20 from the $250 and you bring back $18.57 plus the $1.43 and you put it back into the petty cash fund, what is your petty cash fund total?
It'd be
It should equal $250.
$231.
Well, that's the cash, but you also have to include the $18.57 receipt. So what the purpose of the petty cash fund is, you are collecting receipts because at the end of the day, if your cash fund is low, you're going to take those receipts and you're going to convert them into cash. So then you have a cycle going on forth to continue this problem. So again, I think I should have done a different problem. I should have done a cash register. It would make a lot more sense if we did a cash register. So I'll go ahead and do that for next time, or I can go ahead and say this is a cash register. So again, I'll go ahead and do that for tomorrow, since we're going to go over other things. Okay, so here, okay, so we know that there's no journal entry here. Okay, so here for question number 3, on January 31st, you counted total receipts in the amount of $179.65. Okay? If I were to have that total amount, how do I record replenishing the petty cash fund?
Petty cash or 179.65 and checking for that same price.
No, that's wrong. You never tap into your petty cash fund. Okay? You never tap into your petty cash fund.
It says replenish
Yes.
it though.
How do you replenish?
By depositing money
Yes.
into it.
Good.
Yeah.
So if you have a total number of receipts, right, for $179.65, how do you replenish the petty cash fund?
depositing, $179.65 into your.
Okay,
petty
how do you
cash.
do that?
Check,
From checking.
Checking, good.
in
okay,
the petty cash.
179.65.
Okay, so checking is going to be here for
Mhm.
okay, for $179. $179.65. And then what am I recognizing as this?
We're gonna debit the petty cash
We're
for, for 179.65.
no, you cannot tap into your petty cash fund. We're not increasing our petty cash fund. What are we doing?
Replenish.
Okay. Now, how do you do that? We write a check. Good.
Or cash.
Oh.
If you go to
Mm-hmm.
either one.
Okay. And then how are we going to do this?
Receipt.
I'm sorry, say that again?
Receipt.
Replenish.
Okay. I heard Jabrea say receipts. Okay. I think I need to change this problem.
Don't we have to itemize?
You would have to itemize, but correct.
Okay.
You do need to itemize all your expenses. But in this case, I wasn't specific.
But
It's not broken down. So what I'm going to make the assumption is all of these are going to be business expenses. Okay? So I'm going to go ahead and make business expenses for $179.65. Okay? So actually, you know what? This isn't making sense to a lot of you guys. So I'm going to go ahead and change the problem here. And I'm going to go ahead and change it up a little bit. So here for question 4, you decided to, I'm going to say,
Increase.
no. I'm going to change it up. You'll see how I'll change it.
Okay. Establish.
Mhm.
Isn't it already set up? Oh.
No, I'm going to go ahead. No, this is going to be different. So it's, from questions 4 and on, it's going to be different. So in February, so I'm going to go ahead, write up here too, that I'm going to assume questions 4 through, I don't know, 7 are not related to the previous question. This will probably make a lot more sense for you guys. Okay. So on February 1st, you decided to establish, did I spell okay, I have too many A's. Establish your cash register fund. Okay, I don't need a fund for that. A cash register for $500. So I'm in the business of doing my register, right? This is common for when you're in stores, right? So let's say I'm Starbucks, right? My cash register needs to have a total of $500 cash, meaning I need 10 20s, I need X amount of 10s, I need X amount of 5s, and X amount of $1 bills, right? So here, I'm going to establish that I need to have $500 in my cash register at all times. So here, I'm going to go ahead and journalize February 1st, or let me see, 1st of February. Okay? And I'm going to establish, and yes, I'm going to establish my cash register, right? And how do you put cash in your cash register? From your checking account, as in you need to go to the bank, pull out the money from your checking, and put it in the cash register. Okay? So how much is your cash register supposed to have? $500. That's correct. Okay? So there is my amount, $500. Okay? Now here on February 15th, I'm going to change the scenario here. And I'm going to have so on February 15th, at the end of the day, you counted a total of $156 of cash receipts. Let me see. What is 156?
344.
344. $344 in cash remaining in the cash register. Okay? Now, this is what I want you to understand. So, when you are making sales, right? If you have a set number of $500 in cash in your register and you're constantly trading in your money, right? You're constantly creating a flow of exchanging money left and right. Okay? So you have a total of calculations of 156 cash sales receipts. And in your cash, right, due to all the exchanges, you have a total of $344 in your actual register. Okay? Now, the question is, your cash register has a total of $500, correct? But
Correct.
156 of them are exchanged for your cash sales receipts. That's the money that if someone brings you a $20 bill, you need to give them the change back. So you're losing money in your actual account. So the question is, now that we need to understand how to reimburse it, how are you going to reimburse this transaction? If you have $366 in cash, how are you going to reimburse your petty cash fund? Or I'm sorry, your cash register.
Give the sheet to your supervisor, accountant.
Don't you have to debit your, cash register?
Okay.
For, you're adding back, you have to add back $156 to bring your total back up to 500.
Okay. But my cash register as of right now, if I calculated all my receipts and I add the cash that is in my register right now, it totals up to how much? 500.
500.
Oh,
Exactly.
okay.
So my cash register right now is worth $500.
Oh,
Yes.
Okay?
yeah. Okay.
All right. So how do
Yeah, because your sales bring you right back up to what you should have in your cash, your $500 that you started with.
exactly, but right now I exchanged $156 because my customers, right? They don't give you exact change. So
Right.
No.
because they don't give you exact change, you need to make the assumption to replenish it. Okay? So I need to have at the end of every single day, I need to make sure I have $500 in cash every start of my day. So
Yes.
right now I have $334 in cash. How do I replenish my cash register? You
Write a
need to
check.
write a check.
You,
But for what total?
yeah,
Write a check
for
for,
156, you need to debit whatever the expense was.
In this case, this is sales receipts. Okay?
Oh,
Or sales, yeah, sales receipts, right? But hold on, this is a completely different question. It's not asking you to replenish it. This is asking you to record this transaction. But in this case, I'm gonna go ahead and write
Yeah.
replenish the cash register. And I don't know why it populated down there. So I'm gonna go ahead and
well, you know, your next question is to replenish.
well,
You
no,
should
I'm gonna go ahead
rather-
and get rid of this because that's what I'm trying to explain to you right now.
yeah, we're changing the socket.
Okay, so now that we established okay, hold on. Okay, we're working on question number 5. So I need to get rid of this table because this table, it's not working for me. Okay, so here I'm going to, so here it says cash remaining in the cash register, replenish the cash register. Okay, and I'm going to go ahead and copy one of these tables up here. So I'm going to copy this one. So it can, there you go. And I'm not going to have 0 entry. So here, I'm asking you to now replenish the cash register, because at the start of every morning, I need to have $500 total cash, right? In order for me to operate
Yes.
my business, because what if I had a complete sale, or what if I had a bunch of customers the next day and I don't have enough money in my cash register to go ahead and exchange, right? Then I'm out of money. So if I start the day off with $344, and let's say I had my sales receipt total up to $400 something dollars, that means I didn't have enough cash in my actual cash register in order to exchange. So how do I make
Yes.
sure that I have $500 in cash at all times?
Sales receipts for 156.
exactly.
Debit, and checking for the same price, 156. Credit.
Yes. So here I'm going to debit my sales receipts. I don't know, expense. You can make it an expense. And here I'm going to recognize, actually, no, I'm not going to make it an expense. I'm just going to make it sales receipts. And then this one, I'm going to go ahead and write a check for that amount of $156 here and $156 here. Now, by me doing this, I have cash now to put back into the cash register. And what's going to happen is now I have $500 in cash. So this
Yes.
example, do you understand why we need to write a check like this? Okay?
Yeah. Because you need to replenish it.
Yeah, you gotta keep your cash register at 500.
Yeah, keep some price.
Exactly. Yes. So this is what I was explaining up here. It was a little fuzzy because you guys wanted to do something else, but I was thinking maybe if I change this, it'd make a lot more sense. If you have a cash register, the cash register needs to have cash at all times. So this is a perfect example so you guys can understand that if I have a cash receipt, right? So what's going to happen is if you are in charge of the cash register, what they normally do is they have you, before you close out the register, they have you count the total receipts that you had for that register, and they make you count the total amount of cash you have in the register and report it to your manager. So this is
Yes. You count it.
exactly. You need to make sure that, oh, okay, if my register it only has $344, I need to run out to the bank, cash in all those cash. Obviously, not. You wouldn't really do that. Take the 156, put it back into the cash register, so your cash register starts off every time with $500 in it. Okay, so usually they also too, before you open up shop, they make sure that you count it to make sure that you have the total 500 in there before you start. So yes, so I did change up the scenario. So I'll go ahead and make updates to the scenario. So then you guys are able to practice this. Okay. So in this case, we are pretty much done with this concept. So let's say I don't want to be in the business of having okay, so that's what I didn't have here. So here, let's say I am I start realizing that, you know what, I don't like using the cash register. I want to switch from going completely from a cash register to a to credit cards only. Okay, so here I'm gonna assume that maybe February 28th. Okay, okay, so you decided to switch from a cash register to credit card only transactions. Okay, so journalize the closing of the cash register. Okay, so here I'm going to go ahead and clear out this information here. So here you're trying to get rid of your cash register, right? Because you want to convert from using cash register, so you want to go from credit card only. How do you? So you need to close out your petty cash fund. I mean your cash register, right? So how would you do this?
Debit, checking, and credit.
Correct. That is the correct. Yes, that is correct. You're going to deposit all the money that you received in the cash register, and you're going to close out the cash register by zeroing it out. Okay? So here, if your cash register is supposed to have $500, you need to make sure that you end the day by removing all of the money in the cash register and dumping it into your bank. Okay? So yes, this is correct. All right. Any questions on petty cash fund, or in this example, the cash register?
No, I can't think of any.
Okay, so now this is going to be 8 questions long. Okay, so yes. Does this make sense?
Yeah.
Okay. All right. So question number 7 is, if you have established a petty cash fund for $200 at the end of the month, you've calculated the total amount of receipts to be $155.20 and cash to be $50. You have a blank in the petty cash fund.
Overage.
$5.20.
You have a overage. Yes. You have an overage. So answer is overage. Oopsies. Let's make that all capital. Overage in your petty cash fund. Okay. Now number 8, if you have established a petty cash fund for $200 at the end of the month, you calculated the total receipts to be $150.54 and cash to be $24.46. So you have a blank. Yes. Yes, you would have a shortage in your, yes, because if you add up 150 plus 54 and you're adding 24, you realize that you're missing $25. Okay, so you're going to have a shortage in your petty cash fund. Okay. All right. Any questions to petty cash fund in general? It is all I really need you to understand when you're dealing with a petty cash fund is that I just need you to be able to replenish it. Okay, as far as the class, I need you to understand how to replenish a petty cash fund. Okay, if you could credit or debit a petty cash fund, that is wrong. Okay, so remember to the takeaway from this is if you are replenishing your petty cash fund, all you need to do is write a check for the amount of receipts that are in your petty cash fund. Okay, and that is it. All right. Okay, so right now it is 2:33. So go ahead and take let me see.